Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Monday, March 11th. Well, we had a blowout non-farm payroll numbers on Friday. That put a bid into equity markets. Risk on again. Markets continue to grind higher. Dow up 67, Nasdaq up 11, U.S. dollar even up 62 cents as well. Gold up 69, and S&P up $6. So we had better jobs data, but if you look at it, what's happening is it's driving Treasury yields up. And that's going to really put a damper on Ben Bernanke's plan if interest rates continue to rise. So it's going to be interesting to see what happens with this QE, quantitative easing, with Ben Bernanke in the next coming weeks. But interesting. We have positive economic data that's continuing. I don't see any difference in what would happen this week. We do have options expiration. There is a bullish bias to the week, so remember, guys, we don't want to be looking to short, trying to pick a top here. I honestly think that the markets may test 1575 this week. There's no reason why this market is favored to pull back, at least right now. We are just grinding higher on no volume. There's absolutely no volatility, which hurts the day traders. But for the long-term investor and the swing trader, really not much to do. I would not be adding any positions up here, as well as probably I would rather look to be buying protection. But again, that's based on your trading plan. What else do we have? Well, last night we had some China data that came out. We had high food prices that actually send China's CPI to 10-month highs. And then we actually had industrial production and retail sales growth at multi-month lows. So we could see that China data was a whole lot softer than expected, and I think that there's increasing signs of pressure on the local economy. China is a big manipulator with their currency and their economic data, so it's going to be interesting to see how the risk correlated high-yielding currencies are going to trade, especially Aussie dollar, New Zealand dollar, who's totally tied to their economy. So right now it's holding up fairly well, but this is going to be definitely a crack in the plan for the bulls going forward if China starts really losing its luster with their economic data, and that's really interesting to see. We really need to pay attention to that. So we do have a lot of information today. I have a lot of charts which I want to show you. I want to go right into it. Here's last week's board. Gains and losses for the week, as you can see here. Up across the board, 2 to 3%. Nasdaq, S&P, and Nasdaq 100 and Russell small cap on fire. Has not stopped yet. Transport's up 2.65%. We have retail and banks up, and financials 3.5 to 4%. You could see right here, as you down across the board, we have buyers stepping in, bidding this market up, and I think it's absolutely crazy that people are buying up at these areas. I'm not swing trading anything right now. I would never put anything to work, any money to work at these levels. Even at 1500 and 1475, I wouldn't be buying the market when it was on its way up. To me, that's not in my trading plan. I'll sit and wait until I find an attractive entry here, and if the market doesn't pull back 4 or 5%, and 4 or 5% right now on a 1,000-point rally is pretty decent. So that's what I'm looking for to buy in, and if not, I'll be looking to short on the way down. So that's my trading plan, and I'm looking for the best trade setups for the day. If there's nothing here, I'll just sit back and wait and prepare myself for the next day. It's very hard sitting on your hands. However, sometimes sitting on your hands is the best plan. So just keep that in mind, guys. You don't want to be churning the account looking for opportunity. Opportunity will come, and will come in a big way. I feel that the volatility cannot last like this forever, and I do see a pickup in volatility in the next few weeks, especially when we get closer to that sell in May, go away type thinking, and that's really going to happen. It usually happens almost every year, but you really got to think about it. We're March 11th right now, and May's not that far off. So just be alert, because there's something is brewing, and I could see it, but I can't. I wish I could time it, but if that's the case, I would say that there's going to be one event, and that's when everybody's going to be running for the door, and that's where we will shine as traders and understand. Okay, now we've identified a risk-off event. and now we're going to be looking to short the market. And again, it's just right now, it's just theory. Just want to point it out to you. That's my thoughts of what I'm looking for right now. In the meantime, again, trade the best day trade setups and keep your pallets dry here. Cash is a position until otherwise noted. Okay, indices, everything up across the board. Look at gold. Gold and oil will be an interesting play to the long side. I also think that with the dollar at its highs here, right, and we're at highly overbought levels, I think the commodity stocks, mining, metals, energy, coal, steel, will all start to come alive. And I think that's going to be the buy-in. See, so I'd rather be buying these commodity-related stocks and indexes versus buying equities, which are extremely overbought. So that's my play. Either that or I'm looking at short relative weakness for the day. So that's where I'm going to be concentrating my day trades on. Okay, we're going to be watching the dollar closely. Highly overbought. These commodity stocks and sectors have been beaten up and decimated. So these are going to be my go-to stocks when the dollar starts to sell off. So just keep a note of that, and I will also keep you posted as well. Let's take a look at the sectors. As you can see, green again across the board here. All right, so what do we have? Since we're talking about the dollar, let's take a look at the dollar real quick. Dollar had a nice big day yesterday, and again, looking for a retracement in the dollar to look to start buying gold, stocks, oil, metals, mining, coal, and steel. I'm going to look for the best stocks in those sectors to buy. Once the dollar, I know, starts to look a little frothy at these levels and look to pull in. I do think the dollar will rally, but eventually, again, it can't just continue to go straight up. Eventually, it will pull back, maybe to the 200-day moving average. Okay, now let's take a look at the bonds. This is what's really scary, at least for Ben Bernanke's case. The bonds have actually broke interim support here. The next break is going to be 136. If that starts to happen, look what happens to the yield. The yields are rising. The 10-year. That's gonna put a big damper on financing his quantitative easing. So I think that if this yield start to rally, now right now it's really not much of anything. We haven't taken out the highs, but if we start to rally, we start to get above 2.5% in the 10-year. I think bonds will start really collapsing, and Bernanke's plan is going to really go to the wayside. But again, it's just theory. Just keep an eye on the 10-year. I'm telling you, this is going to be really interesting for Bernanke to see what happens. All right, let's go into some of our indicators. Now, the NYMO is starting to come alive here again, and the reason why I show this on a daily basis is we still have room to run to the upside for the McClellan oscillator to get overextended. And look at this chart. Out of control, just constantly buying, and that's also with the help of the algorithms too, guys. So just make that note. So when you don't think a stock's up 2-3%, you want to short it, think again, because with the algorithms buying and looking for offers, they're just going to run these stocks up to extremely overbought. And again, overbought is not a sell signal, but it definitely, you need to be more patient when you're looking to short something, especially like this, something like this. But again, guys, we have more room to run here to the upside. So let's take a look at new highs, new lows. Again, we're overbought, but we have a little bit more room to push higher. A nice big spike, something like this, out of the norm, would really get me excited as far as looking for possible top. Now, interesting. The Nasdaq summations on a weekly chart. I show this once a week. I showed this last week at the end of the week. We're still on a sell signal. We only have 1 week, so this is like basically turning a large ship. It takes a lot to turn this. So we are still on a sell signal. So it'll be interesting to see what happens this week if this goes back on a buy signal. If that was just a basic whipsaw. Now I want to take a look at. Let's take a look at copper first. Take a look at weekly copper at the lower end of the trend line. This is really getting. Would get me nervous if I was a bull. Copper weekly, we're at the lower trend line. If this thing breaks, obviously I think it goes down to 299, and even if not lower, 275 here. Does not look good. Now that is definitely market divergence when you're having copper not moving and every other indices moving. Now that could the other indices take copper up with it? Well, possibly, but this is definitely a leader, and this definitely should be noted that we have weakness in copper. And there's a daily chart hanging below the lower trend line. We've been chopping around for the last week, 5 days. It'll be interesting to see what copper does this week. So that's something that I want to really keep an eye on. Let's take a look at the VIX. VIX is at all-time lows. Sentiment is at all-time highs. I think there's also going to be a volatility trade in the coming weeks, as well as gold, silver, and the energy sector. The commodity sector and VIX, I think, is going to be a definite trade, and that's something I'm going to be watching to put on in the next couple of weeks. So watch the volatility index. Look at the CBOE. Look at how almost sudden everything just dropped to the waistline. No fear at all in the equity markets. That's scary. No fear at all. So guys, be on your toes, be alert. I don't see anything really happening this week. We have options expiration. We have no econ data today, which is kind of poor because I'd love to see some economic data. At least it kind of gives you a little bit of a hint on where the trend is for the day. So right now we're just basically trading on technicals, and with that being said, technicals are higher, markets higher, trends higher. Guess what? We're going to be grinding higher today. So it's going to be should be a ho-hum day, especially after another move like on Friday. So we need to really pay attention to stocks and try to find the best trade setup as we can. I know I keep preaching it, but it's really important. Bullish percent index here, overboard again. We have the stocks above the 50, stocks above the 200. I'm not going to show it to you. They're all in overboard territory again. I didn't want to get into that, but I wanted to show you some of the key sectors that I'm looking for. Now let's go into GDX. First, let me go into the Huey. This is the Gold Bug Index, and I showed you we stopped right at the 61.8% retracement here, and now we're starting to pull. Now this week we need some follow-through. If we get some follow-through this week, we should have a trade in GDX this week, and that's what I'm looking for. As you know, I think Wednesday, Thursday we had a big move in GDX, getting a lot of emails. What do you think? What do you think? Should we get it? I said one day does not make a trend. Sure enough, we rolled over the next day. For a day trade, yes, absolutely. If you think we're at a base and you want to buy it for a trade and you could define your risk, absolutely. But if not, just stay away until we really get some confirmation. Again, one day or one candle on a weekly chart doesn't make a trend. As you can see here, MACDs are just horrible. We are overbought in the RSI, so this is something I'm going to be watching for the end of the week. Let's take a look at the regular GDX chart. Now, we're sitting on S1 support. As you can see, we broke back down. Friday, we broke up a little bit. I want to see us take out the high here. I want to see us take out a moving averages. I want to see the bullish percent gold miners index start to break up. And I also want to see our GDX GLD ratio start to break higher as well. Right now, we're in confirmed downtrends. There isn't a change in trend as of yet. Now, take a look at the GDX with the Bollinger Bands. Here's the bullish percent index I'm looking at. Here's our ratio chart. And we have our MACDs starting to cross over. Okay, that's going to need. We're going to need to take above, get above 38. I want to see our moving averages cross break, at least break above the short-term momentum average, and then really have some work again. Maybe make another lower high. But we could start accumulating once we start breaking out highs from last week. That's what I'm looking for, is a breakout of last week's high in the GDX, and then we could really start to reevaluate it. All right, let's take a look at WTI, the crude. Now, let me open this up. We have a symmetrical triangle here. We got 1, 2, 3, 4, 5. Should be the end of the trend, of the downtrend. I'm hoping for a little bit of a push up here. We have RSI starting to tick up. We could see our chart, our stochastics, full and slow stochastics, starting to turn back up again, along with our MACD. Again, still needs a little bit of work, but I do like the fact that crude actually made a higher high off of this high and off of this bottom. So far looking pretty good. Let's take a look at XLE. Because these are one of the indices I'll look to buy, will be XLE or maybe the OIHs. XLE daily chart, bullish percent. We did get a crossover here, okay? Now, we are at these lofty levels, but we could have a breakout trade here at $79. Now, don't forget, oil topped at what, 140, 142. So this could easily break, at least get to 100. In WTI crude. So just keep an eye on this, because this is going to give us a trade. Maybe some of the energy buy-in, some of the stocks on the some energy stocks, as well as an index trade. So let's just keep an eye on this going forward. Now let's run into the stock. Just want to show you Spiders 15 minutes. Literally consolidation one day up, 4-day consolidation. Actually, if you want to even call Friday a run up, we had a gap up, sold back into support, and then the market just grinded higher all day. Look at the little candles. And it's very hard to sit there and you realize, you're like, well, you know, market's up 60. You didn't do anything today. No, we didn't, because we have 6.5 hours to trade. You wait for a trade. Next thing you know, it's 2 hours later. Now you're into lunch, and now it's 1 o'clock, and nothing happens. Just a slow grind, not even a dip, and then your day's over. So you know, be patient. Believe me, volatility will come into play, and volatility will pick up. And when that does happen, it's going to be a great trade. Again, GDX, I just want to show you one on the Ninja chart. Here's what I'm looking at. Some sort of a inverted head and shoulders. We do have this bullish fallen wedge pattern. So I have the question mark there. It hasn't played out. This is just my theory. Maybe we get a little bit of a pop up, one more pull back down, make that high low off the low, create that inverted head and shoulders, neckline up here, and then a break higher. That's what I'm really looking at. That's what I'm hoping for. And then we can really get going in the GDX sector. And that's going to happen when the dollar pulls back, obviously. Here's the USO chart. As you can see, USO caught a nice little bit here early on during the week, and then we rallied. Now, we're approaching the 200-day moving average. Maybe have a little bit more move higher, and then maybe pull back again, make that a higher low, and then really start to gain momentum. But again, that's going to hinder on what the dollar does. All right? Here's a SPY monthly chart. Unbelievable that we're at these levels with the way the market conditions are. The economy is. Yeah, we're chugging along, but it's just not. I believe it doesn't warrant where we are, and that's obviously due to Mr. Ben Bernanke printing money and pumping liquidity into the markets. But nonetheless, we're here, and we don't want to fight what the trend is. And right now, we're at 159. We're literally about 2.5 points away from at least matching the highs, the all-time highs actually, of these last two from back in 2000 and 2007. But we shall see. I think it's going to get there either way. Big chart, weekly chart here, guys. You would imagine if you look at a weekly chart, you would think that we'd be up every single day, which we weren't. We only had really 1.5 days of movement, and look at this. We pushed up on extremely low volume. So again, volume's not confirming this move, but price is what pays us. Remember that. Here's the Spiders daily chart. Nice big doji. And as you can see here, volume did pick up. But on the daily chart, on Friday's daily chart, we really didn't have much of anything if you look at it. See, if you look at it, we had one big move up. That was really the big candle. Everything else was sideways consolidation, another slight push up, and then a close at the upper end of the range. Here's the Spider 60-minute. Again, still looking for these moves. Now, 152.90, call it 153, will be your next real support, as well as the 153.60. That's going to be your gap area support. 153.60, 153 is going to be gap area support. So that's going to be the first downside target of one of our pivotal support areas that we're going to be watching. I'll have this labeled for tomorrow. Here's our 30-minute chart, just grinding higher, as you can see here. Look at our Bollinger Bands. So we are really tightening here, guys. Look, we didn't even break out of the Bollinger Band. So this showed you what type of a breakout this was. It was non-existent. So our Bollinger Bands have been tightening since the 6th. And now we're just getting much tighter here. So we're looking for another big move. Doesn't tell you which way, but watch for another big breakout or a breakdown. I think it's going to favor the trend, which would be up. So I think that 1555 area, 1575 area, which would be the all-time high test, probably will happen this week. Okay. Again, here's the weekly chart of the cash breaking up higher. And here's again 1555, 1550 is going to be the first stop. We're almost there right now. I don't see why we can't get there on a daily chart. CCI broke back up again, so it's not bad. It's not bad at all if you're a bull. See what you want, but I'd like to see a little bit more volume, and these overbought readings are just really hindering on everything. Now, here's a 60-minute chart. I'd like to see this market pull back down to this 61.8%, 1450, 1475 area. But again, we would have to reevaluate to see how this pullback, is it compulsive, is it impulsive, or is it constructive? So we'll take a look in one day at a time. We'll just keep an eye on how we're going to view this pullback when it does happen. Here's the transports, again, highly elevated, overbought. Guys, this is something that we need to watch as well. The transports and the Russell. And here's the Russell. Look at the Russell. Out of control. Up, up, up. New highs. New highs in the Russell and in the transports. And in the Dow as well. So they're all in sync right now. But really just crazy looking to buy. Now, watch the Russell, the transports, copper, and the VIX during the day. That's going to give you to see if you got some good market divergence. If it does happen to play out. Here's the diamonds. Look at the Dow Jones, out of control, just literally just creeping up, and actually closed outside the Bollinger Band. So that's something interesting to see if we're going to get a little bit of a pullback. Now, usually doing options expiration, we do have a couple of days of market weakness, and then we just rally back again, recoup the 2-day loss, and then we rally into options expiration. And I'll do a Max Payne overview this week as well. All right, and here's the XLF again. This is going to be a good sector looking at short. Not yet. It's probably months away, but keep an eye on this. This is something to look for. And we got Apple. Apple did manage to hold the 420 level this week. So let's see if Apple can gain a little bit of momentum and really start to break out of this little spinning top here on the bottom of support on the weekly chart. And again, here's the daily chart of Apple here. A little bullish falling wedge formation here. Lower trend line held 420. But if we break 420, you're going to see 400 relatively quick. And lastly is the Qs. Here's the weekly chart of the Qs. Had a decent day. We broke out of that little consolidation for the last several weeks. So it looks like Qs may be technology may be looking to move a little higher. Now, if we have risk off, technology will be the first to be taken out. So, and of course, the Russell 2000. So, be careful if you're looking to buy into technology. I'm looking for a pullback back into this zone area, higher, lower for this low. Maybe once we get a little bit of a sell-off, and then look to buy into technology. All right, guys. I know it's a little winded, it's long, but I wanted to get my key points out and to get you guys prepared for the week. Have a great day. It will be an interesting week. Take care, everybody.